The biggest mistake is confusing activity with strategy. And that's a big mistake that people make. You can be very busy, but there's no strategy. So a lot of business owners are busy marketing, selling, networking, but they haven't intentionally designed how the business should work at the next level. And that's a problem. 26 will reward business that are structured. I keep saying word structured, term-led, positioned clearly. Because if you're still an hustler, hustle alone would not carry your business forward. That's the honest truth. The question is, why do so many businesses get stuck between 10K and 10K per month? I'm going to answer that. All right. That range for me, it exposes straight up that they have a weak system. Because also being an hustler also can get you there, but it will definitely not get you past it if you don't have a system. Because replicating it will be a problem. Breaking through require better pricing. No, you have to have a clearer offer and operational structure. Simple as ABC. Not more effort, but just operational structure.
Yeah, I think it's always hard to sometimes breaking into 10,000 a month is hard because it's like a new level. And sometimes you'll break into 10,000, then it'll drop again to 6, and then it'll go back at 8, and then it'll go back to 12, and then it'll drop to 7. But you're starting to break through that. And I agree with you. The operational system doesn't have to be complicated. In fact, simple is better. But having a system of understanding how to price, understanding your value, and speaking the language of like what problem are you solving for them is really important. Like, what is they don't want solutions. They want to know what you're alleviating for them as a customer or a client, or what joy are you bringing them? Like, are you selling makeup? It depends on what you're selling. So you really have to be very good at speaking to your customer, your end user, and what result are they looking for in order to get those new customers. And I'll tell you, like, sometimes you'll feel like nothing's happening, and you have to break through that momentum. Don't give up, because it's like the law of physics when it comes to sales and clients. Sometimes I remember one year I wanted to make it to like 300,000 or something like that, and I just fell short in December, and then February exploded for me. So just keep moving forward, even if it feels like it's not working right away.
I will add a little bit to that. So with an existing client, same problem, stuck at 10,000. What happened is when you get to 10,000, it was hard, right? You just started, you got to 10,000. You did certain things that made people say yes and sign up with you. But by the time you get to 10,000 every month, maybe a year has passed, you start to forget what got you those customers in the first place. Maybe you were paying so much more attention then, right? You cared so much more about that client, which now that you're a little more established, you don't even have a touch point with that client anymore. So a lot of times going back to the drawing board, because also now you have so much more data. You've been in business a while, you're generating 10K, you have data. Data is king. Now you have data on what made your clients buy from you first time. What is working with your staff? What isn't working with your staff? Now take all that data and you can use that in your scaling strategy.
All right, everyone. And would I say good evening anywhere you are? Thank you for joining today's webinar. It's a great thing that we have great minds here. And first of all, my name is Jay Adewale, and I'm the founder of the Winner Circle and managing partner at Point of View Consulting. I have two other great guests or speakers today. And for you guys that are watching, can see the presentation on your screen, depending on where you're watching from. First of all, just like I said, I've introduced myself. I'm Jay Adewale, and I'll break down the 2026 business landscape and show you how to position your brand, which is why I'm here today. So now, the question you're going to ask is, how do I build and scale my business in 2026? And that's why we're here. So for today, the session is strictly for business owners, consultants, operators who know they are capable of more. That did 2025 with a lot of stress and a lot of strategies, and it didn't come true. Now they are looking at 2026 and they're asking the question that, I want growth. And I know most of the guests today, I mean the attendees for this webinar, they understand that growth without structure would eventually turn into stress. We all know that. So if you ever felt like you're working harder, that you worked hard this year, but nothing moved faster, you're in the right room. And that's why we are here. And that's why we have great guests, great speakers today who are going to show you how to navigate 2026. So if you look at the market in 2026, with the advent of AI, the market in 2026 is not going to reward effort alone. It's going to reward clarity, it's going to reward systems, and it's going to reward leadership. And business without structure would definitely feel pressure. And any business with systems, of which is the point of putting your business together, any business with systems will create leverage over those without. So here's how today is going to flow. I'm going to set the strategic foundation and what's changing and what actually drives scale. Then I'm also going to introduce the speakers today. Natalia, our great speaker, focus on financial clarity and scaling with confidence. And Azgari LIPSHY, our great speaker, also will focus on business models, systems, and execution. Then I'll close by pulling everything together, and then we'll open up for audience questions. So if you are in the audience, if you have any questions, just put it in the chat box for the audience. Just put it on all the platforms, wherever you are, YouTube, Instagram, or wherever it is, just put it in. Then we're going to grab it from there, and they're going to answer that. So you don't have to worry. All your questions will be answered. But we have limited. We can't answer more than 20 questions if there is more than that. So we're just going to select ones, and also what I want you to also do is address those questions. Put the name of the who you want to address the questions to. Then we can answer as best as we can. All right. So let's start. One of the biggest misconceptions I personally have seen in this 2025 is the idea that if I just get more clients, everything will work out itself. That's what a lot of misconceptions that we have. That, okay, if I just need more clients, let me just get more clients, everything will work. Or I will fix system later once I'm making money or start making more money. You need to fix your systems from the foundation. And what I've seen this year working with clients, the most dangerous myth I've seen is the word working harder will eventually get me there. We've seen a lot of people that have worked so hard, but they never get nowhere. They work so hard morning and night, but because they don't have systems and they lack structure. So the truth is, growth without structure doesn't create freedom. It creates pressure. And pressure is what causes burnout, poor decisions, and stalled businesses, where you just get to the point and you say, you know what, I'm no longer running this thing anymore. So most businesses don't actually have a growth problem. Just like I said, they have a structure problem. They have unclear positioning, inconsistent delivery, fragmented systems, and founders who are doing too much themselves. They're just doing so much without no structure. So when those things are in place, growth feels heavy. When there's no structure in place, those small wins will even feel exhausting. And that's what we don't want. So now, let's talk about the 2026 business shift. One thing I want you all to know as entrepreneurs, business owners, aspiring business owners, whatever the status you are now, situation you are, as we head into 2026, I want you to understand that something important is happening in the market. The market will not reward effort. I've already said it earlier. It's going to reward design, businesses that are system-led, not personality-led, process-driven, not reactive, and businesses that are clear on pricing, delivery, and leadership. And I want you to take that to the bank. Those are the businesses that will scale. And this shift isn't coming. It's already here. Because at the advent of AI, everything has changed. So now I'm going to talk about the core framework. I call them the 3 pillars of a scalable business. Organization. Every scalable business rests on 3 pillars. I'm not saying, to me, 3 pillars, not 10, not 20, just 3. Clarity, which has vision, positioning, and pricing. We have systems and we have leadership. If any of this is missing, growth slows or even breaks. So let's talk about clarity. That is where everything starts. Clarity means you know who you serve, what problem you solve, how you solve it, and why you are different. Without clarity, marketing feels scattered, sales feels forced, pricing feels uncomfortable. One guarantee I can give you is, with clarity, everything aligns. Here's the key. If you can explain your business clearly, the market won't trust it. I was talking to a potential client a few days ago, and I asked, they're trying to set up their business, and I asked a question, and I said, can you tell me what you do in one sentence? And they had to say, they have to think. If you cannot explain your business clearly, the market won't trust you. And that's the honest truth. And I'm going to talk about pillar 2, which is going to talk about systems. As a matter of fact, point of view consulting, that's one thing we focus on. Creating systems. That's what turns effort into leverage. That means systems allow you to attract clients consistently, deliver without chaos, track performance, and scale without burning out. So if your business only works when you are involved in everything, you don't own a business. You have a 9-to-5 job. Or I would say the business owns you, because systems create freedom. And that is what we want as an entrepreneur. We want to create freedom. So the first initial stage of your business, you want to create a system that can predate you. We drive Mercedes, we drive Ferrari. This was created by somebody, and they create a system. We go to McDonald's, we go to Chick-fil-A, was created by somebody who has created a system that without them is still moving. If the owner of McDonald's died today, McDonald's is still going to sell tomorrow. So we need to take note of that. The third pillar, before we introduce our next guest, leadership. This is the most overlooked pillar, and that's the honest truth. We overlook this pillar so much because we really forget that leadership means making strategic decisions early. That's what leadership means. Letting go of control. That's what it means. Building processes instead of reacting. And finally, thinking like a CEO, executive officer, not just an operator. So what you should know today is growth requires a shift in identity. You can't scale a business while thinking like a technician, which leads me to why most businesses stall. And I would say most businesses stall in the same place around, 10 to 30K per month range. That's what I've figured out. It's a pattern I notice in businesses, and I'm wondering why. And it's because also still works at that level, but also doesn't scale. There's difference between running a business and hustling. At that point, pricing weaknesses are exposed. So the higher you go to that point, system starts to break, and the founder becomes a bottleneck. And I will just tell you that breaking through that plateau requires redesign. Not more effort. It requires you to redesign your structure. So now, the thing is, I can guarantee you the businesses that will win in 2026, they're going to do few things differently. They will definitely design for scale early. They will invest in systems before chaos. They would even build with the future in mind. And they will understand what structure does, not shortcuts. What structure does. And they will not wait for things to break before they put structure in place. And they will lead intentionally. And that is the foundation for today. So but everything I've shared today set the foundation. But strategy alone isn't enough. And that's why you're about to hear from leaders who work daily with financial clarity and operational execution. Because I want you guys to feel and see how this plays out in the real world. So everything you will hear from our guests today, our speakers today also, builds on this foundation. Strategy sets direction. Finance and operation make it real. So I'm going to be introducing our next speaker. Natalia Zasharin. I'm sure I pronounced it well. So, yes, if you look at her, she's going to bring clarity to this conversation. She understands scale from the numbers up. She's the CEO of Zasharin Consulting, and she's also a fractional CFO. The fact that she went from earning $7 an hour to building a 2.5 million financial consulting firm, and today she helps business owner scale with confidence and control. So I'm just going to welcome her so she can have the conversation, continue the conversation. Thank you so much.
Thank you for the introduction, Jay. I'm just getting my slide up. So really excited to be here today. We're going to talk about a couple of things to get you in the right mindset for 2026, because to be honest, any year that is, no year should really be a full down year. You can have a good year every single year if you plan. And that's what we're going to be talking about today. So a little bit about me real quick. I'm CEO of Azgari Consulting. We started in 2019. So we're just beginning our 7th year in business in January. Currently, I'm a fractional CFO for 40 other companies, and I run a full service accounting firm. We are a fractional CFO and accounting firm. We became an Inc. 5000 honoree in 2025, Inc. number 802, with a 525% growth over the last 3 years. And scaling profitably is what we live for. So that's what we're talking about today. And that's what we live for, and that's what we want to see everybody do. So your playbook, the most important thing is the foundation, accurate, timely financial data, hiring wisely, lead generation, and sales. So I'm not a salesperson, but we are going to talk a little bit about the beginning of what happens before it lands into your revenue, and correct pricing and real growth. So just like Jay had mentioned, the rules of business are changing fast. AI is compressing margins, accelerating competition. The ability to get into an industry now has really become a lot looser. You don't have to have a ton of money to enter a lot of these industries or even have a lot of experience anymore. So your competition is growing. Customers are more price sensitive. We're in the trust economy. Everybody's promising all kinds of things, and not everybody's delivering on it, but your clients and your customers are tired of hearing the promises, and they want to trust you. They want to know who you are, what value are you bringing. Talent has gotten a lot more expensive. Just to let you know, someone with the same skill level that we hired today for 80,000 in salary, we could hire 3 years ago at 50,000. That's a tremendous uptick in how much people cost. And mistakes are costly. So hire the wrong person or at the wrong time, that could really cost you a lot of money. Cash mismanagement is the #1 killer of businesses, even successful businesses. I would venture to say that over of the 5,000 businesses that are on the Inc., that means they have grown tremendously in their revenue. No one asks them about their profit or their cash flow and what does that look like. And I'd venture to say that there's a very large portion of those businesses that have a very low profit or are running out of cash. In fact, most businesses that scale that quickly usually die off in 2 to 3 years. And so 2026 will reward the prepared business owner. The old playbook is breaking. Like Jay was saying, exactly, hustle without structure is not going to work for you anymore. And reactive decisions are creating risk. Guessing is expensive. So everyone wants to grow, but few can grow profitably, and profit does not equal cash. If you owe a lot of money, if you have debt in your business, if you owe an old credit card debt, if you're pulling out money in distributions, that is not hitting your profit. So that is going to change how much cash you have. So profit does not equal cash. Many times we have clients coming to us and say, I made a $300,000 profit, but I only have 60,000 in my bank. Why? Where'd it go? So you have to be really cognizant of where your cash is going, because cash is still king. 82% of all businesses that start run out of cash. That was a survey that was done by the US Bank. So you can be unprofitable, but if you don't run out of cash, you can sustain your business longer to figure things out. And of course, we want you to be profitable because profit does impact cash, but you have to be able to have those cash reserves. All right, so winners prepare early. We plan instead of react. Forecasting is really important. When you create a forecast with projections, you're looking at where I am right now, where do I want to be in 12 months, and how am I getting there? And what does that look like? What is the variance? Because that really helps you to to project costs, to project, like, are you on track? What's going on? And to answer a lot of questions. And winners build margin and cash on purpose. Accurate, the first pillar, financial organization, freedom. Accurate, up-to-date financials are key. So important. I know this sounds very foundational, and most people are probably like, oh, well, that doesn't make any sense to, like, why is that so important? We onboard approximately 10 new clients a month, and I would say 8 out of 10 don't have accurate, up-to-date financials. That's how deeply disturbing this is, because you can't make any decisions if you have no idea what's happening. So you have to get your bookkeeping in order. Hire someone. That's going to be one of your best hires, is to hire someone that's really good at it. Having good financials will answer all of your questions. It'll give you structure, which will drive clarity, and clarity fuels better and faster decisions, which is more important than anything else. You can't afford to wait. You need numbers now that you can trust. If your accountant that you're working with is telling you, yeah, they're up to date, I've got your numbers through September, we're in December. They should have numbers through the end of November for you right now and working on December. And if you're working with someone who's looking forward and looking at forecasts, right now we're looking at not just what happened in November in the history of your business, but what is happening right this second, right now in December, and what we're planning to happen in the next 12 months. So you need timely insight. Actually, you need to look ahead. You need a crystal ball. So cash keeps the business alive, forecasting a minimum of 90 days ahead, and looking at, like, where is everything trending? Where is your revenue? What does your pipeline of revenue look like? What are your expenses every single month? What is the average of your expenses? What if you have people? What is your payroll? What does that look like? And to save 60 days of those expenses. That might sound hard. A lot of businesses aren't able to do that, but that is the key, to do it slowly. Just put in, I don't know, $500 a month, $100, $10 a week, whatever you can do. Put that into an additional checking or savings account in your business, leave it in there and let it grow, because you're going to need that cash if you have a downturn. The trend is what matters. Where you are now is not where you're going to be in 3 to 6 months. You can be in a really good position and then have a slow profit leak over 6 months and then suddenly run out of cash. So it's always the trend that we're looking for. Your operating cash is not all yours. Remember, you have to separate it for taxes. That is not all yours to keep. And cash flow is timing. One client that might not pay you in time, that may be a big client, and then you have a contractor or a vendor that wants their payment right away, that can really throw you off balance. So that's why planning all of this in advance, seeing it all in your financials, is really important, and projecting that out. I want to tell a little story about mindset of success. Decisions not only get easier when you have a foundation of financial information and data, they get faster. Making a decision faster is usually better. In the time that someone makes a decision fast, makes a wrong decision, and then corrects that decision, is usually faster than someone who doesn't make the decision or takes too much time to make it. The door of opportunity is there for those that take a little bit of risk with data, calculated risk, and who move quickly. So you'll see that the most successful businesses are the ones that move fast. The most successful business owners are the ones that make decisions quickly with data. So it helps you to pivot really fast as long as you have good data. But again, the faster you are able to make decisions, the better it is for your business, especially if you make a wrong decision, because then you can correct it. Let's talk about hiring now. Hiring, I'm not an HR specialist, but I am a specialist in profit. And your most expensive resource is usually going to be your people. And if you want to scale and grow, even if you are a sole proprietor right now, if you want to get to a certain level, you're going to have to hire, because you can't do everything, and you can't scale if you're running everything in the business. You're going to have to hire. And every hire will impact your cash flow. So every role, you must have some kind of return on investment. Either they are doing the work itself, whatever that work is. So they're doing the client work or the customer work, or they're creating the product or the service, and you're getting an ROI on that, or a return on investment, or they're returning your time as the CEO. So if you hire an administrative assistant or even a personal assistant at home, if your return on investment is your time getting back to you so that you can work on more impactful things, not busy things, impactful things. Having a process for hiring beats emotion. We use the book Who by Randall Street and Jeff Smart. I highly recommend everyone read that book. It's very easy and short to read. There are scorecards there. There are 3 interview process plus looking at referrals. That's what we use. There's been a lot of times where I've made decisions to hire someone because they sounded great, we connected, we had chemistry, and then it was a disaster. You don't want to hire people that you have chemistry with. You want to hire people that can do the job. So you have to have a process so it's not an emotional decision. You have to make sure that every position that you hire for knows what it is they're going to do for you. What are the metrics? What are the goals? What are the expectations? Time of that expectation. All of my employees know exactly how many clients are supposed to be working on, when all of the financials are supposed to be due, what is the time with that. We have a workflow system. We have someone that holds them accountable. They hold themselves accountable. Everybody can see what everybody else is doing. And so that peer pressure is kind of helpful too. Sometimes they help each other, but make sure that everybody knows what's expected of them, because your team has to be productive. None of our businesses can afford to have a team that isn't extraordinarily. We're not hiring to help people. We're hiring for those people to bring us value. The more money your business can make, the more people you can help. You're not a nonprofit. So you have to hire people that are the most impactful. And hiring for productivity, I have noticed, and this is very true, and this is very hard, especially it could be very scary. We pay people more than they typically make in the industry. I'm proud to say that every single one of our employees are making more money than they ever have working anywhere else. And that makes 2 things really simple. The simple thing is if they're not excellent and they don't work out, I don't feel bad terminating them because we tried everything that we possibly could. So it doesn't always work out. You can't test for work ethic or character. They just have to start with you, and you can see, are they a good fit and aligned with your company. But I've noticed that sometimes the people that are more expensive, that they are more productive and more efficient, that they actually don't waste money, and they actually bring us more profit because they're doing the work even faster, better, and more impactfully. Hiring to relieve pain. So I see a lot of problems with business owners hiring when they are overworked, when they're tired, when they just can't do it all anymore. You need to hire when the math works. When your profit and loss statement is saying you have this much revenue, you have this much in expenses, and you have about 60% left over in profit, or 50% left over in profit. You need to have a pretty high profitability in order to hire people. So the math has to work when you hire. Hiring people just because you have too much work is not the correct answer for when it's time to hire. The correct answer for when it's time to hire is, when do you have the revenue and the profit to cover it? Because margin erosion will follow. That is the biggest downfall I see of 90% of the companies that start working with us, is their payroll is bloated. They're paying too much in payroll and their revenue can't cover all of it. So the right time to hire is before you get burned out, but that means systems, processes, streamlining, automating, reading things, after the math works with a clear outcome. And this is where your pricing is really important. Are you charging correctly? Are you charging competitively? No one, your competition is not really your competition like the way it used to be. You need to charge what you need to charge for your values, what your business requires, what you have to do to hire the right people and the best people. So your competition might be charging very, very differently, and that's okay, because you're going to be different. And you need to really create your value out there and charge for your value, not where your competition is. Honest, for us, for instance, anyone with a computer can say they're an accountant, and they do all over the United States and in the world. So that's who our competition is, everyone. And it doesn't matter. We've still been able to build a multi-million-dollar firm in a very short period of time We're not going to be a great fit for everyone, but we're a great fit for hundreds of clients. And that's who is finding us, and that's who we want, is that great fit. And we don't worry about what our competition is doing. I worry about what my competition is doing in the sense of, are we better? Are we bringing more value? Is the customer service better? Is the product and the service that we're creating, is that better? That's more important. Make sure that you design the roles with clear expectations, measured performance, align everything with your core values. Make sure you do have core values and a mission statement, and you live and die by those core values and mission statement and vision statement. Those are really important. A good book on how to get those put together is called Teamwork by Natalie Dawson. Makes it really easy. Have financial guardrails. Understand your payroll to revenue ratio so that you know how much money you have left over for all of the other operations, reinvesting back in the business, profit, taxes, and everything that you need. And remember, the A-type employee may cost more, but will save your profit. So the next pillar for us is growth. It requires leads. A pipeline of leads is really important. No leads means no leverage. So a business demands stability, and it demands constant fuel. And sales can fix a lot of things, but you can't fix things without leads. You need to have the leads to have the sales first. Again, I'm not a marketing specialist, but the most important thing as the business owner is that you need to drive revenue. That as the business owner, you're driving culture and you're driving revenue. So you have to track lead sources, know your metrics, especially if you hire a marketing agency, an ad agency, or anybody. They should be giving you all of these metrics: cost per lead, client acquisition cost, booked rate, show rate, close rate, lifetime value, churn. You actually need to know all of these numbers to see, are you getting a return? And how are those numbers trending? Are they going up? Are they going down? They'll go up and down over the months, but the overall trend over a 3 or 4 month period is really important. And invest intentionally. Make sure that your marketing, that your advertising, your sales, that everything that you're getting a return on your investment, that it's actually working for you. And remember, predictable sales create confidence. If you know that you can grow a certain amount every month or every quarter, now you know how many people to hire. You know what your profit and your cash is going to look like. You can stabilize your business, and a predictable business is also a business that's more valuable if you ever want to sell it later on. Pricing is not pricing as a strategy. It's not a reaction. It's not based on competitors. It's based on your business and on the value that you bring. Look at your profit, look at your pricing, and make sure that you're pricing correctly. It's very, very important to price things correctly. Don't be afraid to price higher than your competition, price for value, and keep bringing more value. Underpricing is expensive. You can't afford to hire the right people when you're underpriced. Your teams become overworked. You get the wrong hires because you can't afford the right people, and you're under constant pressure. So if you feel like you're working way too much and you can't afford to hire someone, you're probably underpricing. Margins fund growth. Profit and cash allows you to reinvest in your business. So you can have better hire, better systems, more cash, marketing and advertising. We added in 2024, we hit 1 million in sales. No, in 2023, we hit 1 million in sales for the first time. So we hit our first 7 figures in 2023. And I added benefits. We pay 100% benefits to our employee for their medical, dental, and vision, and 401k plus matching. And we add PTO and company computers. So the profit has allowed us to create a much better company, a much better culture. We're constantly reinvesting, constantly be reinvesting in your business. Better, more marketing, better people, better benefits. You want to attract the most amazing people. And then profit for you, the owner. This is why you're doing it. And the more money you make, the better things you can do for the world. So making money is not a bad thing. That's how you can help the world. So don't forget, 2026 is the year of accurate, timely financial data, hiring wisely, lead generation and sales. Make sure you're closing those deals, and correct pricing. And all of that will equal real growth. So thank you. You can follow us on Instagram, LinkedIn, and on Zachman Consulting, and I really appreciate it. And that's it.
All right. Thank you so much. That was powerful. And I'm sure a lot of listeners really enjoyed the conversation and what you shared, So I'm sure everyone listening to this webinar knows that financial part of your business is very important. And if you don't take it serious, you are not in business. No matter how best you structure your business, without financial clarity, your business will fail. And it's just a statement. So now we have another great person, great speaker. Let me share my screen real quick. Okay. So in continuation, you have our great speaker, Azgari LIPSHY. She's the founder of Azgari LLC and a service business strategist who help entrepreneurs launch and scale service businesses in 90 to 120 days using a done with you model. That means she will stay with you from day 1 to 90 or 120 days. So she's going to give us clarity on execution, getting things done in the business world for 2026. So Azgari, welcome, and I would turn to you.
Hello. Thank you so much for having me on the show. And Natalia, everything you said was gold. Really, really appreciate it. I think new entrepreneurs, small business owners really needed to hear everything that you said. So thank you for sharing.
Thank you, Azgari. I'm excited to hear yours.
Of course. Thank you. I don't know. I mean, that's a tough one to follow, but I'll try.
Mine's kind of dry though, so you're probably more fun.
So I am going to go over the step-by-step process, right? Because when you hear launching a business in 90 days, it sounds crazy. It sounds almost too good to be true. Is this a scam? Well, it's possible when it's structured and it's done step by step, one at a time in a methodical manner. And I'm going to go over what those steps are so that if you're watching this right now, and you're thinking, you know what, 2026 is the year I am going to go into business ownership because I am tired of having somebody else as a boss. Or if you're an existing business owner and you're, like Jay said, you're stuck at that 10 to 30,000 in rev per month, then this is going to be super helpful for you because, like Jay said, you need to restructure. If you're stuck somewhere, that means something somewhere is a bottleneck. And the only way to find it, unpack, right? If you have to unpack and revamp and restructure. So I hope what we go over today will be helpful for first-time entrepreneurs and those that are stuck in that 10 to 30 revenue band. First, I'll give you a quick rundown of me, my background. My name is Azgari LIPSHY. I am the founder of Azgari LLC and Azgari Foundation because we do have a non-for-profit attached with our for-profit organization. We help individuals who want to become entrepreneurs but don't know where to start or even what business to start. We help them figure that out in a very strategic, methodical manner. Then we help them launch the entire business. And then we actually don't just stay with them for 90 days. We stay with them for a full 365 days until they're ready to file their taxes and probably get handed off to Natalia. That's the for-profit aspect of our business. The non-for-profit, we are building a live and learn space for kids who are aging out of foster care. They probably don't have good family support. Once they age out of the foster care system, a lot of them end up homeless. So we're going to provide a place for them to live, have safety, a shelter, and learn technical skills and have certifications. Then we can plug them into the service-based businesses that we launch for our clients. So it kind of comes full circle. So the clients that work with us, we not only help them launch the business, but also train their staff, and they get to support this non-for-profit cause of helping kids who are aging out of foster care. And that's a quick rundown on us. Now getting back to the 90-day launch. When we help individuals launch in 90 days, even if you're a first-time business owner, the reason it works is because you're not doing it yourself. Even if you're a first-time business owner, you have a full operational team, myself and my team, launching every step of your business methodically. That is how we can benchmark that the business will generate between 300 and 700K its first year in revenue. So let's talk a little bit about the key differences based on what we do. We don't encourage high-earning individuals to quit their job, to let go of the safety of that job, the W-2 that comes with healthcare and everything else, right? We encourage individuals to keep their job security and have us build out their entire business for them for the first year, so that at the end of the year, they're coming from a power position. So, for example, they could have a conversation with Natalia and say, the business generated this kind of net margin. This was the revenue for first year. Do you recommend that I now quit my full-time employment and take over as a business owner here? So that is our goal with every single client, to put them in that power position so that they can make a decision to become a full-time entrepreneur or keep running the business with the staff that we put in place. Now that I've kind of given you a high-level idea of what we do, my background for why I do this: I've built, sold, purchased, acquired multiple small businesses for 7 figures. And I've already worked with about 160 small service businesses to help them scale and launch both. So let me explain the steps for launching a business methodically the right way the first time through an example of a current client, actually. His name is Antoine. So here's the situation that Antoine came to us with. When he came to us first, and this is an exact statement from him, I want to do something. I want to do something in construction. I'm a school teacher. I don't want to do this anymore. What do I do? I don't know what to do. I don't know where to start. I don't know how to price it. I don't know how to find customers. And I don't know how to run a team. So you can imagine that's a very, for most people, I think, that's a very confusing space with zero clarity of which direction to go. But for us, at our firm, that's a perfect baseline to start, because it's more difficult when somebody comes to us with an idea for a business, but the business itself has not been validated. If you come to us with an idea, but we have no validation whether if that particular business is going to do well in the local zip codes and market that you want to operate the business in. So coming to us with, I don't know what to do, help me figure it out, is our sweet spot. So let me walk you through the steps that we go through to help individuals come up with the right business model. Because the wrong business model is, I would say, one of the top 3 reasons why small businesses fail. And I'm sure you know this already. The stats for small businesses failing the first 3 years is crazy high. So to launch, one of the constraints that Antoine had is he only had $50,000 in liquid capital. And with that, we were able to get him about $150K, 30% down SBA loan. And that was enough to launch the business, have enough capital at hand, and have enough run rate for the entire first year. But we had to be very, very strategic on our monthly expenses, right? So instead of, like Natalia mentioned, instead of immediately going into hiring, we took on a lot of his sales and marketing in-house to keep operations lean. And instead of outsourcing a lot of things that normally people would want to go to individual consultants or firms, we tried to solve a lot of those with software and automation. I mean, in 2026, this is such a great time where you can genuinely run multi-million-dollar businesses, even as a solo entrepreneur, because of the amount of automations and software and AI tools that are available at your fingertip, even if you don't know how to code, even if you're not a tech person. So we implement all of those into every single business that we launch. And we did that with Antoine as well. Long story short, we didn't just guess, right? We went through a very strategic step-by-step method. We started looking into his constraints, the time availability, which was good because he had plenty of time. He was actually quitting his job as a fourth grade teacher to now start his own business full time. We don't always, to be honest, most of the time, that's not the clientele we get. Most of our clients do have executive positions, which they keep. So that was a very big positive for us to work with Antoine. His goals, he also had very modest goals of making around $500K in revenue, around 150, 175 in net margins per year, which are very, very achievable goals. So what we did was we first analyzed his city. He's from St. Louis. We analyzed the city in terms of what are simple construction service businesses that are already in existence. What are the gaps in the market? What are those companies thriving in? And what areas do they suck in, right? Are they falling short in customer service? Are they falling short in terms of pricing? We analyze the market to narrow down around 6 business models, which would be good performers in that city. Then we narrow it down further with what are his natural skill sets and things that he likes to do, right? Or he's good at, or even has some sort of trade skills towards. He comes from a family, his father has been in construction for 40 years. So after talking to him, understanding his father's skill sets and how eager he was to help his son start a business, we narrowed down from the 6 construction-related business models that the best for him would be an HVAC, because opening an HVAC company would meet his requirements for net margins, his take-home income quite easily, because the profit margins for HVAC, specifically in St. Louis, were above 45% gross. So that is the model we went with. But if you see, we didn't just close our eyes and just pick a model, right? It was very strategically done through a very systematic process. And we take the same approach to the rest of the business launch as well. Identifying a gap, create the entire business system. So the administrative system, the marketing, the sales, then the follow-up and client journey, all the way to setting them up with individuals like Natalia who can, once we are done setting up the business, once we are out of operations, depending on 90 days or 365 days, whichever engagement the client has with us, we hand them off to capable individuals like Natalia or someone with the marketing background or sales background that we have built a relationship with, that we know have a history of success or bringing success for their clients. So the reason Antoine, coming from a background of being a school teacher, has been able to be a successful HVAC company business owner, I would contribute that to 3 of his fast decisions, right? As Jay mentioned, making decisions fast is crucial, specifically in small business. You don't have the financial bandwidth to drag on a mistake for too long, right? You'll run out of run rate. So for him, the 3 really good decisions he made: first, he understood what he doesn't know. And the way he collapsed that time gap was coming to experts who have done this repeatedly. So even though he himself doesn't have the expertise, he was able to draw from our expertise and our pre-built systems and automations to get him to a cash flow positive business within 2 months. Within 2 months, through our personal networks, through our own outreach activities, business development activities, we were able to land him a church HVAC project, which would land him at a $20,000. So his first job as a HVAC business owner was $20,000, and then 3 more commercial HOA related jobs, adding up to $40,000 within his first 2 months as an HVAC business owner, when he had very little to almost no expertise or knowledge in that space. Like Natalia was mentioning, nowadays you don't have to have per se the specific know-hows of the type of business you're trying to launch, because there are so many experts who can so here's the practical takeaway, I would say, from Antoine's story. If you're not someone who's ready to quit like he did, you're a senior role at an organization, you should calculate your true hourly value. Let's say you take your monthly salary and you divide it by 160 hours. So that's 40 hours for 4 weeks. And that's your approximate hourly rate, right? So now ask a simple question. Is that number higher than what it would cost to hire experts to build your business correctly and train you to do it the right way the first time? Super important. Doing it the right way the first time. And if the answer to that question is yes, and for most high earners it is, then doing everything yourself is probably the most expensive mistake you can make. So the big takeaway here is don't learn by losing. Pay for proven expertise, get it done the right way the first time, and buy back your time while you build something that produces real cash flow.
All right. Thank you so much. That was a great presentation, and that's what I often tell business owners, and also people who are aspiring to go into the world of business itself. Sometimes you need somebody to hold your hands and lead you around. Makes it easier for you, and also you need finances to somebody to take care of your finances, to show you how best you can actually achieve things properly. So as we begin to round off, before we go to the questions, so we found out that we have a lot of questions. So in the question segment, before I do my final words, let me first introduce myself again. For people who I didn't get to introduce to me, probably people who are joining, we have a lot of people on the platform joining in. So now, first of all, for you that I didn't introduce myself earlier, my name is Jay Hadewale. I'm a business consultant and also a business coach. And I've helped many entrepreneurs and also service-based business owners build structure. Not just only that, I always say what that word, they call me Mr. Systems. I've helped them install systems and also scale in New York, all over the nation. Profitability is very important to me without chaos, because that's very, very important. All right. And I'm also the managing partner of Point of View Consulting here in New York, and the host of the Winner Circle podcast. I'm sure a lot of people know that. And where we spotlight high performance and practical strategies that actually work. So today's about giving you clear framework you can apply immediately. So you can live with directions and not just motivations. We don't want to do motivations. We want to leave you with directions. And that's what we want to do. And that's the goal. And that's why we're here today. We want to make sure you get all the information you need to start 2026 afresh. And that is what we want. So we're going to put this together. What you've heard today, I'm sure, is not a theory. We don't do theory here. These are like people who do things every day, who have done it, who have been there, done that. Operations, financials. So you need to understand that strategy without financial clarity will fail. And financial clarity without system will stall. And system without leadership will create burnout. So the businesses that will win in 2026 are not guessing. What they are doing is they are designing. And that's where I come with. If today's webinar made you realize that your next level requires more structure, clarity, and leadership, then your next step isn't another webinar. It's a strategic decision. That's why exactly I created, as a gift for you guys today, I created the Winner Circle Business Transformation Program. So if you are interested in the program, just send an email to hello@winnercirclewithj.com, or just send me an email straight, j@winnercirclewithj.com. I'm sure you're going to get the link below, or probably in the chat. It's going to be an 8 to 12 weeks program that we're going to just discuss. We're just going to try to talk about building structure, then implementing systems, also scaling from that 15K monthly. So if you're stuck with that 15K to 50K monthly problem, we can discuss about that in this program we'll be designing. Also, there's also going to be a workbook that will be sent to you. All the people that registered for this webinar. So if you don't register, probably you're seeing it on Instagram Live right now, or YouTube Live, or Facebook Live, or wherever you're seeing it live. You can just send your email to j@winnercirclewithj.com, or send it, or just drop it in the comment section also, so that somebody can just our team can pick it up and we can forward your email. So thank you so much. I want to say I hope to see you by this time next year, making millions of dollars and creating lasting impact for people. So let's quickly, for the wanting of time, we have questions lined up. So, but we're just going to do it this way, right? Those questions, what we're going to do for these questions, we're just going to answer it with just one short word as the question comes in, so that we can save time. So finally, if you ask me who the program is for, business owner ready to scale, consultant and service provider, leaders out of chaos. Not for hobbies, not for people looking for shortcuts. We're not doing shortcuts. So we're going to do the 8 to 9 weeks starter. So just send me an email and we can get started. So for everyone that has dropped the questions, so my team are forwarding it to me as much as possible. So the question they forwarded, first one is, what's the biggest mistake you see business owners make as they prepare for 2026? What's the biggest mistake we see? So for me, okay, it was routed to me. So I believe this is also a financial blind spot to it. So after I answer it, I think I'll let Natalia just second it. Then we'll move to the next level. So for me, the biggest mistake is confusing activity with strategy. And that's a big mistake that people make. You can be very busy, but there's no strategy. So a lot of business owners are busy marketing, selling, networking, but they haven't intentionally designed how the business should work at the next level. And that's a problem. For me, 2026 will reward business that are structured. I keep saying word structured, term-led, positioned clearly. Because if you're still an hustler, hustle alone would not carry your business forward. And that's the honest truth. So I'll let Natalia just talk about the financial blind spot of it.
I think that the biggest mistake that you can make in 2026 is not hiring the right financial person. A good bookkeeper is really, really important. Good bookkeepers aren't cheap. So your $10 an hour bookkeeper or your mom is probably not going to cut it. I see that. Trust me. Or doing it yourself. The problem with doing your own bookkeeping, it's not data entry. And not only do you have to understand accounting and accounting principles, but you also have to understand how the software reacts, because it's quirky and it's different. A lot of accountants don't even understand that. So don't do your own bookkeeping. I always tell people, like, I know how to clean my own house. It just doesn't make sense for me to do it. As a business owner, it also doesn't make sense for you as a business owner to do your own bookkeeping unless you're an accounting firm. So hire the right person. That's an outsourced contractor. That's going to be one of your best hires.
Hire the right person. Very, very important. So
yes.
The second question that came in, and I believe it was straight up to Azgari. So he said, at what point should a business stop focusing on growth and start focusing on systems? So before you answer that, let me just quickly put a point on that. I believe, because I understand system, the moment growth starts to feel stressful, instead of it being sustainable, then that's a problem. So if more clients, getting more clients means more chaos, more exhaustion, even more confusion, that means you need to create a system, because systems are built after growth. But that's why I said systems is very important. So I'll let you go.
I'm going to have to, I guess, yes, I agree with you. But at the same time, I would say you don't move into the house before it's built, right? As important as customers are, you want to have systems and processes built before you start going after sales. You might start prospecting ahead of time, right, to start building out your pipeline, but you want to have strategic systems and processes in place as you're building the company, so that you're not, you're not backing into it later.
Yeah,
Does that make sense?
Yeah. Systems are, yeah, I think we're on the same pipeline. So that's great. Yes.
So I think when you can see that the benchmark for that industry in your local market is growth, for example, we're talking hypothetical here, if the growth rate is 3% month over month or year over, whatever that is for that industry, and you're not hitting them or exceeding them, then of course there's a constraint here that we need to look at.
All
Does
right,
that make sense?
It makes perfect sense. So let me let the financial person answer too.
I think that that you're outgrowing your systems. First of all, if You can't get the work done without a lot of chaos.
Hmm.
Or your team feels like there's a lot of chaos. So if you have a team, some people here might not have a team yet. I can always tell because we've grown 500% over 3 years. That can be extremely chaotic. The problem is that if we don't have a good workflow, a good system, the right people, the right engagements, the right pricing, if we're not, if there's no scope, like we have to make sure there's no scope creep, right? So everybody thinks that everything is included and it's not. So to be very careful, everybody has to, the whole team has to understand the engagement. Otherwise, they start feeling burned out too, even before the owner does. So the owner has to have their pulse on the entire company, not just on themselves. And I think as business owners, we technically have a lot more patience and a lot more resilience towards chaos, but our team does not. And we have to really be aware of that.
All right. So for me, I believe the biggest signal is just straight to the point. If you step away from your business and things start slowing down, that's not a workload problem. That's a structure problem. And you need to take note of that. So let's go to the next level, the next one.
It's a good one.
Question. Yeah.
It's true. Can't leave your business. It's not a business. Yourself.
Right. Yeah, you're an operator, you're not a business owner.
Yeah.
Of course. So if a business owner could only fix one thing in the next 90 days, what should it be?
Depends on what stage they're in.
Yeah, okay. Let's just say random. One thing that's very important, from you. And I will also take from you and, let's just round it up.
I mean, if there's one, look at your expenses, right? And you want to see what can you automatize. It'll not only reduce expenses, but also it'll create automated systems, which again will help you become an absentee owner where you're not in the day-to-day operation so that you can have a bird's eye view of the entire business and strategically make decisions on how you're going to, what are your next moves?
All right. For Natalia?
That's a good one. Streamlining and automating is really important. I would also say, well, cash is really important, but honestly, doing what is most impactful. I find a lot of people do stuff that they enjoy. Like I have one client that was hand signing all of her invoices. And like your client doesn't care. Stop doing that. So do what's most impactful, not what keeps you busy. Or sometimes you can't even do things that make you necessarily happy. It's not worth the time. It's worth the time to do what's most strategic, what's most impactful.
That's great. So for me, I believe clarity. It's part of the 3 pillars I talked about. Positioning, clear offers, clear priorities, everything that has to do with clarity. Because when you improve that, everything will become easier. Even your staff will understand everything easier. I mean, sales will be clear, pricing, systems, even leadership decisions will be clear. So I believe in clarity. So let's go to the next one, which is, I like these questions. So this says, another one saying, financial clarity. It talks about how do you identify your most profitable client? That's a big question. So Natalia, you want to go first?
Yeah, I would definitely say you can do this either like in an Excel by manually if you want to, or do it in your QuickBooks because you can do like a tag or classify something in QuickBooks. I would take the revenue that's coming in and then everything that has to do with that client, like is someone specifically working on that client? Is there any labor related to that client? Is there any specific software or cost of goods sold or anything else that applies to that client? And then I would also take what percentage of that revenue is your entire revenue, and then take that percentage also of all of your operations and put that in this as well, because you're going to have like software costs and email costs, and I don't know, maybe you may even pay rent for an office or whatever it is. But that's going to give you a pretty good idea of what percentage is that client bringing in revenue. You don't really want to have a whale either, because if they're bringing in 80% of the business and you lose that client, you're dead in the water. So you do want to look at that as a percentage of revenue, and then also all the other costs that go into that, divide that to find out or subtract it out what is left over, and that will help you kind of figure out like what is that profit of that client, at least the gross profit in the least. And there's so many different percentages. It really depends on the industry, but that will give you some really good ideas of what's going on. And don't forget all that time. Your time is not free. All the time.
Right. Yeah. Super important.
Yeah. So let me just put it in the word you said about the client, 80%, as if you're talking to me, because this year, one of our major clients, our point of view, is like they literally pay like 80% of operations, like the money they pay is like 80% of all we spend, and they pull out because they do government contracting, and when the president came in, he pulled up a whole lot of contracts from a whole lot of businesses, and it affected them, and they had to shut down, and we also have to. So it took 80%. That word 80%, they literally do it. That's why I put my hands up. I'm like, so everybody listening to this, you need to take that advice. This particular advice that you hear from either of both speakers is very, very important. Just take it with the golden gloves. I'm not going to comment about this. I'll let her go, and that's all. And so we can go to the next questions.
Well, I'll add a little bit to it, right? When you have one client that's bringing in 80% of your revenue, now you have gone back to being an employee. Because if that one employee fires you, now you're back to being laid off.
True.
So you want to keep your revenue diversified as much as possible. Anything that's 60% or more from one source, we have a problem.
It doesn't mean to get rid of that client. It just means
yes, no. Yes.
Add more clients.
Thanks, Natalia. We might have gotten some lawsuits from that one.
Yeah, and I was gonna say, like when Jay said that, like if your business doesn't bring you to your knees on a regular basis, you're not really running a business either. It's gonna kick you in the gut regularly, and that's normal.
Of course. So another question that comes in, he said, what does predictable monthly recurring revenue actually look like in a service business? So
Thank you.
I'm just gonna go with the
Sorry, I didn't even add that to my presentation. Predictable monthly recurring revenue. So it depends on what you do. So if you're selling a service, if there's any way that you can create, like our service is monthly. It's month to month. There's no contract, but it's still monthly. So as long as clients stay with us, we know how much money we're making or how much to anticipate. So there we can, we don't do an hourly charge. Hourly charges are you're stuck with the amount of hours in the day. And the hours in the week. So we do a flat rate. The flat rate means that we have to be good at what we do because we have to be profitable and we have to really do a good job and do it quickly and productively. The flat rate pricing that's recurring really helps. I even have an architect who went from, these are just projects. Some industries like real estate is really hard. If you're a real estate agent, it's very hard because you're going to have like really big swings in revenue. If you are an architect, a lot of times they go by project. But what my client is doing now is if they have a project for, let's say, $80,000, instead of charging $40,000 like every 6 months or whatever it was that they were doing, they're now cutting that $80,000 into however long they think that project's going to last, into 12 months. That helps their recurring revenue to also build. Anything that you can do that has a monthly recurring revenue is actually even more sellable. Like if you have a subscription type business, it is a lot more of a sellable type business. So you can create a valuable asset that you might be able to sell later on down the road. I hope that answers the question.
MRR. Well, your MRR, right? Your monthly recurring revenue, your CAC, your cost of customer acquisition, your LTV, lifetime cost of acquiring a customer. These, like Natalia said, these are very important metrics that you want to have a very good strong hold of, because that's another thing we do with our clients. One of the first conversations at our onboarding is understanding their purpose, right? Do you want to do this business because you want to sell it and make a 6x, 12x profit and maybe retire from or do something else? Or do you want to leave this to your grandkids? Like, what is your intention here? But either way, in both intent, having a good stronghold on those KPIs is what's going to help you have clarity, is what's going to help you have, metrics to look at to make the decisions for, how are you going to move forward?
Yeah, I always tell people that having a monthly recurring revenue is like, if that can cover your operating expenses every month, every project revenue or new client or anything above that is just icing on the cake.
This is great. Yeah. Yep.
So how do you package and price services without undercharging? A lot of people always ask that question. Even when I coach people, they think about, how do I charge without undercharging or overcharging? Because for me, I feel undercharging itself, I usually say this, it comes from unclear positioning. Because when your offer is clearly defined and outcomes are specific, this is what I'm going to do. Pricing is easier. I'm more confident to talk about. So that's just my own take on that. Meaning authority drives pricing, not the amount of hours you worked.
So pricing, I would say, has to do with value, right? For example, I'll go back to Antoine. When we created his pricing strategy for his HVAC business, we didn't go by, it's only taking you 2 hours to replace this entire system, because that would be $100, $150. But no, it's $4,800 because at the end of the day, if you don't have an AC and you're in St. Louis in the heat, so you pay for value that you're getting. Does that make sense? And at the same time, you're also want to make sure you're staying competitive with the market, especially in service businesses, right? Unless you're positioning and branding yourself as a higher, you can't actually, you can't break above the market industry pricing because then you won't win any jobs. I'm speaking specifically for service. I'm sure other industries, the brand positioning and pricing according to brand position is much more important.
Yeah, I agree. It's there is a definitely a ceiling to pricing. So like I can't quote a very, very, very small business $5,000 a month to their bookkeeping. That's
I don't
ridiculous.
have it.
Yeah,
Yep.
it won't happen. But I know what happened to me in the beginning. When I started in 2020, I hit that wall where I'm so busy, I need to hire someone. And then I looked at my numbers. I was like, I can't afford to hire someone. So my pricing was wrong. So what I did was I increased my pricing to all new clients. And that's helpful. Again, lead generation is super important. Having a pipeline, new sales is really important because you can change your pricing. You really learn how to do sales. You don't have to be stuck with clients or customers that are angry or you don't like, because not everybody's going to be a good fit. And we don't want to be stuck with mean customers. And that happens, right? It's rare, but it does. You want to be picky and choosy with who you work with a little bit. And so if you get lead generation and sales really locked in, even if your pricing is a little bit higher than your competition, if you're good at sales, you can still do that. And everybody can get good at sales. There's so much information out there on how to become good at sales. And you should definitely take the time to learn that. But yeah, if you charge by how long it takes you to do something, like tell me this, do you think it's fair that I have 7 years of experience and I can do something in 30 minutes because I'm more experienced and someone else will take them 2 hours? It doesn't make sense for me to charge less because I have more experience.
Of course. Mm-hmm.
Exactly.
Of course. Mm-hmm.
Let's go.
Power.
So there's this one question, when I was making presentation about the 10K and 30K per month being stuck. So the question is, why do so many businesses get stuck between 10K and 10K per month? So I'm going to answer that. All right. So that range for me, it exposes straight up that they have a weak system, because also being an hustler also can get you there, but it will definitely not get you past it if you don't have a system, because replicating it will be a problem. So breaking through require better pricing. No, you have to have a clearer offer and operational structure. Simple as ABC. Not more effort, but just operational structure. So I'm just going to see your view.
Yeah, I think it's always hard to sometimes breaking into 10,000 a month is hard because it's like a new level. And sometimes you'll break into 10,000, then it'll drop again to 6, and then it'll go back at 8, and then it'll go to 12, and then it'll drop to 7. But you're starting to break through that. And I agree with you. The operational system doesn't have to be complicated. In fact, simple is better. But having a system of understanding how to price, understanding your value, and speaking the language of like what problem are you solving for them is really important. Like, what is they don't want solutions. They want to know what you're alleviating for them as a customer or a client, or what joy are you bringing them? Like, are you selling makeup? It depends on what you're selling. So you really have to be very good at speaking to your customer, your end user, and what result are they looking for in order to get those new customers. And I'll tell you, like, sometimes you'll feel like nothing's happening, and you have to break through that momentum. Don't give up, because it's like the law of physics when it comes to sales and clients. Sometimes I remember one year I wanted to make it to like 300,000 or something like that, and I just fell short in December, and then February exploded for me. So just keep moving forward, even if it feels like it's not working right away.
I will add a little bit to that. So with an existing client, same problem, stuck at 10,000. What happened is when you get to 10,000, it was hard, right? You just started, you got to 10,000. You did certain things that made people say yes and sign up with you. But by the time you get to 10,000 every month, maybe a year has passed, you start to forget what got you those customers in the first place. Maybe you were paying so much more attention then, right? You cared so much more about that client, which now that you're a little more established, you don't even have a touch point with that client anymore. So a lot of times going back to the drawing board, because also now you have so much more data. You've been in business a while, you're generating 10K, you have data. Data is king. Now you have data on what made your clients buy from you first time, what is working with your staff, what isn't working with your staff. Now take all that data and you can use that in your scaling strategy.
All right. Thank you so much. Yeah. So, another question that came in, it says, the person said, what should I do immediately after today's session as a business owner? So what should I do right? So I'm just going to quickly take the answer. I would say, if you're a business owner, the thing you need to do is take an honest look at your business. Look at where it is versus where you want it to be. You also need to identify gaps in those three pillars I talk about, which is clarity, systems, and leadership. And don't lie to yourself. I mean, don't ignore what's obvious. That's usually where growth is blocked. Review those things and you'll be fine. And also, remember the Winner Circle Business Transformation Program. You need that. You know, it's a 8 to 12 week program to help you scale, which you need to take note of that. All right. So I'll yield. Then we can take the last one, and the other ones we just make it short and we let it go. Sorry, guys, that we have to do this, but time.
Another one.
Yeah. All right. Oh, you take the other.
No, I'll take this. What to do first? Definitely get your financial systems and everything in order. Have a separate bank account for your business. Don't treat your business like, and mix it with business and personal. Don't do that. Treat your business as if it's a completely separate entity, as if you don't even own it. Pull money out as a distribution and spend from there personally. Put money in if you need more money, and spend from your business. So just really separate that out, because that'll give you a lot more clarity. And I'll say I'm a huge believer in mentorship, masterminds, learning. You cannot stop learning. You have to normalize bigger numbers. I think we're gonna hit over 3 million this year. That is actually not that big of a number. Like, look at businesses that are 90 million, a billion, right? So you have to normalize these things also within your brain. They're not that hard. When I hit my first $100,000, I was like, woohoo, it's more money than I ever made in my entire life. But I was doing it all. It's like you can't hire anybody at $100,000, and that's okay, but that's not sustainable. It's just a little tiny bit more effort. Just keep pushing more, a little bit more. It's worth it. You can make multi-millions if you just push a little more, and you have all these other things in place. Masterminds, learning, and normalizing.
I'll add one little thing. Most of the time, it's not a massive thing that you need to change and overhaul. It's that tiny micromillimeter. It's like golf, right? It's that micromillimeter adjustment, right? That'll do the trick most of the time.
Mm-hmm.
That will do the trick. So you said it all. So the last question before we go to I just thought of it now. We can actually answer 3 more, but we just use one sentence. So, but for this last one, which I feel is very important. The person says, how do I know whether I need a coaching or I need systems or financial clarity or, service business? How do I know I need that? So
if you're asking, you probably need it all.
I was going to say the same thing. You need it all. I'm still in masterminds and coaching. It never stops.
Same. Yeah.
My own take on this word is most businesses don't just need one. They need alignment. Coaching guides your decision. Systems support your execution. Financial clarity shows that, shows everything about your business was actually working. Whether you hide the business or not, your finances will tell you can be making $100 million and your profit is maybe $10,000 after expenses and all that. So your financials will help you understand if you're really making money or not, which is very important. Yes. I feel like in the business world, the financial leaders, CPAs, everybody in the world of finances, like the main people, they decide how far you can go. They tell you the truth. And also, the operations would definitely tell you this is how it will work because of patterns. Finances will tell you, see, listen, you are making money, but you are losing money. And also the business coaches also help you with growth, but still yet, it's still going to give you advice. So I think everything works together. It's an ecosystem. I think 3 of us right here, we're working as an ecosystem. So yes. You need to take note of that. So, and that's the answer for that. Just straight up. One system every entrepreneurs underestimate. These are like straight up questions. One system
how much you can do.
Every entrepreneur underestimate?
Yourself, how much you can do. Everybody thinks they're a Superman.
Natalia?
I think they underestimate their bandwidth, their mental bandwidth, and also their time, because it's not just your business, it's also your personal life. You have to shift things around in your personal life too. Maybe it doesn't make sense for you to go food shopping or clean your house.
For me, one system that every entrepreneur I feel like they underestimate is repeatable client acquisition and delivery system that can just acquire client for you and deliver. Just same circle. You're just making your money. I think that's what Amazon have.
With thousands of people working behind it.
Yeah. So one financial metric every founder should track weekly.
I'll say cash. Like, how much cash did you start with the week? How much cash did you end with the week? Is it negative or positive? Like, what happened? What were you expecting for the next couple of weeks? I would also look at payroll to revenue ratio. So look at how much is your labor or your payroll, including all of your contractors, whoever, people that you're paying, and is your revenue is at 30%, which is a really good number? Is it 80%, which is not a good number? You know, and some industries are really different, but look at your payroll to revenue. If you've got a big cost of goods sold, like if you have a product, you might have to look at payroll to gross profit percentage. So that ratio of your labor is really important. And then your profitability, especially at the end of the month, because you want a fuller picture. But every week, cash. Look at your cash.
Okay. That's powerful. Do you have anything to add?
Look at who owes you money.
That's very important.
I feel like you need to pay the Rihanna song right here.
Yeah.
Pay me.
So I would say cash flow. And that's it. That's one word, cash flow. And I agree with everything you say. You know, you're the financial person here. So what Azgari, what do you think?
Sorry, what's the question at this point?
One financial metric every founder should track weekly.
I mean, I look at more from a sales and marketing aspect. So looking at your CAC, you have to, because nowadays, especially with it spending on ad spend, whether if it's Google or Meta, Facebook, ad spend is getting crazy. Like buying ad time, it's insane. If you can't keep your CAC at under 20%, you have a problem, because that's not even counting the commission and your sales expenses or your, your COGS. So CAC, yeah. What is it costing you to get a customer? Period.
Acquisition is very important. All right. For the final question, we have a lot, but I just gonna make this final because I know we can answer everything. Maybe hopefully, if you have any question, if you have any other further question, you can send to them directly, through their links, email, and they can share the emails. You can also forward questions. But I think we're just going to answer this one last question and we'll be on our way because we have fast spent. It's very interesting conversation today. So one decision business owners should make sooner than they think, I would say designing the business for the next level, not the current one. Design your business for your next level.
Fire faster.
How about you?
Oh.
Fire faster.
Yes.
Don't drag it. Let it go.
Yes.
Let it go. That's magically going to be better. Trust me.
Yeah,
Same with marriages. Let it go early.
Yes. Yes. Don't make an emotional decision with hiring and fire faster. Yes, I agree. Because
whether if it's employee or husband, let it go early.
I'm divorced too. I get you. And I feel like dating and relationships, marriage is very, very similar to how you're hiring too. So like, within 4 or 5 weeks, maybe even 3 weeks, if that person's going to work out. You already know you're kind of on the fence. Like why?
You keep hoping maybe a little more training. If I just spend a couple more hours every day.
Yeah. And you always know when you have the right person because it is a relief. If it's not a relief, they're not the right person.
You're right. I know how it takes, I've even worked with a lot of employees. I know how that is. No emotions there. Sometimes you're like, emotional. Are you sure I should fire
but
this
it's
person?
My friend.
Yeah, do not hire friends and family.
2026. Guys,
fire faster.
Wow, this is a very great conversation. And I really want to say thank you for sharing your insight today. And I also want to thank everyone who joined us live. And also, I want to say thank you to everyone who's going to replay this conversation because it's going to be on all platforms, YouTube and Spotify and everything. So if you're still listening to this, I want to say thank you for listening to this conversation. But the thing is, if you listen to this conversation and you do not take action, then you're wasting your time. You just wasted your time. Action, action, action. Take action. 26 is everything you need. I know the video is going to be, some people are going to listen to this video or this audio in February, March, April, May, June 2026. No matter the time you listen to this audio, remember one thing. There is not too late for you to take that step. Even if it's in the middle of 2026, you can still take the step. It's not too late. So, and for the people who join, you're going to receive the replay and next step via email. So remember, growth is not accidental, it's designed. So I will let my speaker have a final word and we can leave.
Natalia.
I would say don't give up. It's not easy to be a business owner. Something that Jay actually said in the very beginning about leadership, the business is going to be limited by the leader that you are. So you constantly have to keep growing as a person, as a leader. There's a lot of information out there. A lot of it's free or very inexpensive. There's a lot of groups and masterminds. Surround yourself with the right people and make sure that you've got up-to-date, accurate financials. That's extremely important for making decisions.
Well said. I'll leave you with a tiny story. I have a current client, true story. She's 70 years old. God bless her. She's amazing, brilliant, high-power executive. But the conversation I had with her is, I've been wanting to do this for 35 years and I've just been scared. I didn't want to make the wrong decisions, lose my savings. But I'm so glad I found you now. And I'm so glad she found me now. But my God, 35 years. We could
Not
have
too
sold
late.
5 businesses for her by now, 10. So
Not too late.
even if you don't have the answers, lean on people who do. It doesn't have to be the 3 of us here. It could be anybody else, but lean on people who can collapse time for you and get you to where you want to go faster. Fall forward, make a decision, and just leap. Go for it.
Age doesn't
Fall
matter.
forward.
Nope.
Yeah, doesn't matter. Doesn't
But
matter.
it helps if you do it early.
Of course.
It does help a little. I started my business at 50. So
There you go.
Not
there
too
you go.
late.
Not too
Remember?
late.
Not too
It's
late.
never too late.
Not
I have
too
a
late.
friend who started at 80.
All right,
Literally.
guys.
Yeah.
All right, listeners, I want to say thank you for listening and see you on the Winner Stop in 2026. All right, guys. Bye, guys.
Bye. Thank you.
All right. That was a